Joining us now in studio is Ben Lichtenstein, the host of Futures here on the Schwab Network, to discuss some crypto, Coinbase, Bitcoin, all the good stuff. Ben, thanks for joining us here. Coinbase got a lowered price target to 60 from 63. Bank of America keeps the underperform rating. They talk about some of the numbers and things. You can look those up, but basically trimming down some of their top line estimates on this company. But when you look at it, Coinbase was so followed. Crypto as a whole was so followed, particularly by the next gen investor. I haven't heard a ton about it in 2023.
Well, I think price activity is probably a pretty good reflection of that. We've been very much range bound. I agree. It was very closely followed and very heavily participated in as well. Now, we have been a little bit more in a bit of a range consolidation here. And the way I look at price activity when you get range bound and limited in terms of real conviction, as we have been in shares of COIN, that's a form of acceptance of a big move oftentimes. You can see here, after a big move, you get overlapping rotational price activity, and it shows this new level being accepted relative to, like, Alex, Jenny, a V-bottom type pattern forming, and you see kind of a rejection. So here, overlapping sideways rotational price activity with a fair amount of information in it. You've got an upper extreme, a lower extreme, and then take a snapshot. This 78 level is going to be key in terms of our discussions here. So you can see it's basically the middle of the range that we've been in. This chart goes all the way back to, we're talking the end of August, beginning of September. Again, that upper extreme around 86.50. We traded down to this $69, $70 level into the end of last month, and here you can see mostly sideways. Now, taking a step back away from the recent price activity we've seen throughout September, the beginning of October, and that range-bound activity we've seen around 78. I want to show you what's been going on. This chart goes all the way back to the beginning of July, when we were up, middle of July, I should say, when we rallied up to 114, if you remember. And then notice here the high conviction associated with this big move lower here on the left, we'll call it third of the screen, right? And then for the most part, how we've just been really mostly sideways. Again, kind of hanging out around the 78 level, but you can see high conviction on the left side of the screen, mostly overlapping and rotational, just sideways. So as we take a look at this, I want to show you what I've got here for you. You can see that, well, in this instance, again, that 78 level becomes pretty significant, right? It's pretty important. So let's move away from the hourly candles here. And I just want to show you, look at this pattern here. You're going to see almost an identical pattern playing out here when we look at the price activity we've seen off the highs, the run up into the highs, the fall of 2021. Similar situation, right? We've got high conviction to the downside on the left, we'll call it half, third of the screen, and then mostly sideways, overlapping, kind of rotational price activity. Not a lot going on, but where are we again? Right around that 78 level. This really speaks to the significance thereof. Take a look here again. High conviction selling throughout, we're talking the fall of 2021 into the end of the year, beginning of 2022 down to May, and then we went sideways around 78. Now, lastly, I want to show you what's going on. Take a look, because we also see how you get this staircase type pattern playing out, right? So you have this pattern repeating itself multiple times throughout this, again, high conviction trade, sideways consolidation. Just wanted to show you real quick where we are relative to the 50, the 200-day moving average as well, and that kind of speaks to the point. Again, Alex, there hasn't been a lot of conviction here. We've been sideways, rotational, but this is all in a kind of a longer term trend to the downside. So essentially investors have been accepting some weakness here and have had a hard time rejecting this lower level, or even really forming a bottom here and rallying off that.
Or even forming any sort of trend that could excite you. I mean, we're just sort of stuck range bound. It sort of follows our theme where it's like, it feels like right now the market is lacking any sort of catalyst, just clinging on to anything. The crypto market, I think, is no exception there. Coinbase lower today, but has seen, I mean, a really phenomenal year, all things considered. But again, the volatility of it has fallen so substantially. It's like we're up over 100%, but from, depleted levels.
Well, oftentimes coin's going to be a reflection of the crypto market, right? So that makes a lot of sense. Taking a look at another chart that I have prepared for us here today, Jenny, you can see, right, we have almost the identical pattern as Bitcoin rallied up to, well, you've got the highs up around 69,000. We're talking the end of 2021, which coincides with the big move up that we saw in coin. And then you get that big move lower, sideways consolidation. And look at this. As I take a look here, you can see, I'm pretty sure it is this one that we wanted to look at. It is 26,000 is where we've been range bound and just sort of sideways. Also, I want to show you a similar situation. As we take a look, you can see how we're hovering, teetering around the 50-day moving average. Look, there hasn't been a lot going on in Bitcoin. Bitcoin either after coming off that 32,000 high, lower extreme around 24, and here we are kind of hanging out in the middle, kind of working our way towards that lower edge of.
Well, Ben, appreciate this breakdown on all things the crypto space. I think this is one that when we have so much volatility outside of the market, we tend to overlook here, but a really great breakdown on what we're watching in terms of overall trends. We will leave it there. Ben Lichtenstein, the host of Futures.